Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Good afternoon.
Well, third quarter earnings coming in on Wall Street. Some big companies came in lower than expected, a few much higher, but stocks were up overall. What's the story in the global markets today?
Yes. Despite the concerns about the Brexit uncertainties, overall market in general were pretty much flat to slightly rising trend is shown. If you look at the Dow Jones, it was up about 0.17%, S&P was up 0.28%, Nasdaq was up about 0.2%. European market, despite these concerns, pretty much flat. Euro was about up only slightly by 0.06%, and DAX, German index, was up 0.34%. In terms of these numbers that are coming out from U.S., Tesla soared its sale prices by 21%. So most of the geopolitical risk is still there, but nevertheless, earning results are coming in better than expected in many cases, and that is actually winning the uncertainties, and that is actually showing in the right direction in terms of share prices. Also, the U.S.-China trade negotiation seems to be going in the right direction. That is adding to the positive news. As for the Asian markets, pretty much mixed. Korea was down most of the day, but at the end, it closed with a slightly up trend, and also Japan was up about 0.5%. Also, China is slightly down, but nevertheless, it's recovering from the lows of today.
As you mentioned, the KOSPI down for most of the day today. A lot of foreign investors, though, they say, are buying back in. What's happening in Korean stocks today, and what areas stand out to you?
Yes, if you look at the overall valuations of Korean market, it is definitely cheap in terms of price-to-book valuations. If you look at the KOSPI, it is trading at only 0.83 times a book. Also, the KOSDAQ has been coming down quite a bit, so now it's trading at only about 2.4 times a book value. So most of the earnings seems to be bottoming out, as you've seen it in the share price movement of SK Hynix. In general, earnings drop that has been seen in the last 2 years is probably bottoming out as of third quarter, and then maybe starting next quarter start to show some side trend, and then maybe recovery in next year. General expectation for the earnings recovery for next year is very strong for KOSPI by 19% and KOSDAQ by 30% in terms of YOY growth numbers, after quite sharp drop of earnings this year. All this is because probably the key sector is the IT and bio sector. These are the two main sectors that suffered quite significantly because of the drop in prices and chip prices, as well as some of the concern about the new drugs rollout. But overall, it seems that the numbers are bottoming out. And if that's the case, then next year we're looking at probably a very strong equity market for Korea.
Well, now, more broadly for Asia, the IMF has released a report saying growth in the region is slowing down more than expected. Generally, what's the outlook for Asia among global institutions, and how does Korea figure into this?
Sure. IMF said that they lowered the Asia growth rate expectation for this year from 5.4 to 5.0%. And for the next year, they lowered it by 0.3 percentage point. And also, as for Korea, they lowered much higher by 0.6 percentage point. The issues of the Korean-Japan dispute was raised as well from IMF. And also, IMF said that they have lowered because of the uncertainty regarding China risk and Hong Kong protest risk and uncertainty in the Middle East and higher consumer debt level and corporate debt level of Asian countries. And they also mentioned some things about weather changes and natural disaster problems as a future risk. And IMF is basically asking this, because of these lowering numbers, they're asking for further rate cuts, additional money supply for the major central banks in Asia, and also they're actually asking for further budget increase to boost economies. We think, though, the Asian economy is not going to go through the recessionary period next year because, as what IMF is asking, the further rate cuts as well as as the additional budget supply could be positive news for the economic recovery going into the next year. At least it's not going to go to the recessionary territories. The numbers should be fairly flat for the YOY for the next year, we think. So if that's the case, then yes, Korea seems to be much lower than expected, and also overall numbers are lower than expected for this year, but at least it is bottoming out, and maybe next year, including Korea, Asian markets should do quite nice recovery.
Got it. All right, Mr. Yu, that's where we'll have to leave it today. Thanks so much. We appreciate your insights.
Thank you very much.